Hi, this is Peter from Game of Trades, and today we're going to be taking a look at what's happening on the stock market. This is the S&P 500. The markets have just hit long-term resistance. This is the resistance channel that we were looking at a couple weeks ago. And so far, the markets have been selling off aggressively from that reaction. So that's what we're going to focus on today. We're going to take a look at the long-term view on the S&P 500. We're then going to dive into the shorter-term charts, even though they're moving very quickly. And then we're going to be taking a look at the market breadth, which could be signaling additional downside in the coming days. So that's what we're going to focus on today. If you're new here, make sure to subscribe to the channel. We post multiple videos on the stock market every week, and the next episode is going to be on Bitcoin, so make sure to tune in for that. Now, without further ado, let's get right into it. This is the S&P 500. We're going to take a look at the weekly chart just to remind you guys what this price channel is, right? So we were looking at this a couple weeks ago. We hadn't hit that resistance just yet, but over the last week, we did encounter that resistance, and so far we've had that reaction. That's extremely important to note. The markets are paying attention to this level. Now, we knew this was an important level before that reaction, but seeing this reaction confirms our bias that we could get quite a big reaction off this long-term resistance, especially after the big rally that we've seen. So if we zoom out on this weekly chart, you'll notice how important this price channel is. This is actually a price channel that goes back to 1974, the very beginning of this secular bull market in stocks. The bull market actually started in 1982 if you actually look at the inflation adjusted chart, but in nominal terms on this chart, the price channel and the uptrend actually starts in 1974. And so we've taken a look at this before. We saw how many important reactions there were along this trend line. Both the bottom, the top, and the middle of the channel are levels that are extremely respected by investors. And this is just to show you that really technical analysis is used by large capital to position at the right moments, to book profits at the right moments. And it can be used to determine significant reversal points in the markets. This is the 1987 top and the 1987 bottom are both captured within this price channel. So that's just to show you guys how significant this level is. And in fact, on our Twitter, on one of our last posts, this post right here, we talked about this price channel as we were starting to hit it right here. And we said a 5 to 10% pullback from current levels would be healthy for the stock market, right? But if we break out, that would be the melt up scenario, right? And we would have an acceleration of that uptrend. But so far, it's still too early to say exactly what's going to be happening over the next few days. But so far, it does seem like we're having quite a significant reaction off that level and that we are going to get potentially a 5 to 10% pullback, which would be healthy. We maintain our bullish bias on equities. We haven't had a melt up yet. We're not yet at hyper valuations, right? We're getting close, but we're not quite there yet. So there's no reason to pick out a top until we have some sort of a melt up move or a black swan event. That's something that we've been saying for quite a while. So a 5 to 10% correction from this reaction would be healthy. And so that would take us around to these levels here. And you can see we have this blue line right there, right? That corresponds to the middle of this price channel, and that could actually act as some nice support on the way down if we come down. And again, that's very important to understand. It all depends on what happens in the next 2 sessions. If we have a large snapback back into the channel, perhaps that could trigger a melt up move past that resistance, and that would actually be a scenario where we'd look to buy off a back test right here, a blow off top move here, then a back test, and that would be a nice buying opportunity. But right now, it does seem like the markets are trying to break down below this price channel structure. If they are successful to do so, we're looking for lower lows towards these levels, and here we'll be looking for buying opportunities. By the way, make sure to hit that like button as hard as you possibly can. It helps out the channel massively. It makes our effort worthwhile. So thank you so much for doing that. So I'm speaking a lot in terms of scenarios, and the reason for that is because we're currently neutral on equities. We had a trade setup back here, a long trade setup right before the elections, and we had a trade set up right here on that breakout above this consolidation right here, this triangle consolidation. We had that breakout backtest, and that was our entry. Now we booked profits along the way. We came out of the trade during that correction right here as we broke down the bullish structure. So we no longer have long positions on the S&P 500. We don't have short positions. We're just looking for opportunities. And so that's why if we do have that breakdown, we'll be all over these support levels for buying opportunities. Now, if we take a look at the futures chart on the 8-hour chart, we can take a look at what's going on the shorter time frame right here. So this doesn't look good. This move right here was quite bullish. We had a snapback into the channel. That was a bullish move, very similar to what we had here. But you can see this move failed. We have lots of red today, and we've cut back through that support level right here. Now, you can probably add this level right here. So this is where we've so far reversed. So we're really at a turning point in the markets. We still have some sort of a bullish structure. We're still on a higher low right here. But what do we have? We have our first lower high right here. So the markets are definitely still deciding where to go. And so I do believe that the most important level to be watching right now is this level right here, the 38.30 points, right? So far, right now, we're still above that level, or by the time we close the day, perhaps we'll have broken down below. In that case, again, we're looking for lower lows. But if the markets hold, right, they manage to hold and bounce off, then that could spark another rally, right? So this is the level to watch, and it's what you should be paying attention to. Now, I do want to take a look at the market breadth today. And so we're going to take a look at that in the context of being at long-term resistance. So that's important to note because you've got the markets at long-term resistance and you've got quite an interesting picture on the market breadth. And that's what you want to be doing with your analysis. You want to be combining different factors together and seeing if they align. And if multiple factors start to align, you can start to raise your convictions for a certain scenario. So this is an indicator of the percentage of stocks that are currently above their 50-day moving average in the S&P 500 basket. So how many stocks are trading above their 50-day moving average? And you get this indicator that oscillates up and down between bad market breadth and good market breadth. And so you can see, let's zoom in a little bit right here. You can see on that rally here from that election low, we had incredibly bad market breadth and we had a thrust all the way to the top of that indicator. So that was an incredibly bullish sign. That's one thing you can conclude from these breadth indicators. When you have thrusts like these, it's a bullish sign. Now, nothing's perfect. You will get whipsaw signals. We had one right here. You had a nice thrust and then the markets dumped back down, but that was a bullish signal. And so that was a nice buy entry. Right? We had a nice trade setup here, but now something else entirely is happening. We're having the markets trade up, right? Grinding up towards that long-term resistance. And what do we have? We have the market breadth start to decline. So that's definitely not something you want to be seeing. And I'm going to show you exactly why right here. That's the first example. So that was right before the COVID crash. You had very similar price action, a nice price channel here. And then you had these two highs right there. And you can see what happened to the market breadth, a large decline in breadth while the market keeps on going up. That's called divergence between price and breadth. It's a bearish indicator. Now let's zoom out a little bit. Let's take a look at other examples right here. We had the 2018 crash, that V-shaped recovery right here. And then the markets went on for a massive rally. Again, you had a nice breadth thrust right there. That was a bullish buy signal long-term right here. But after that, you had a period where the markets kept on going up, but the market breadth started to come down, signaling a short-term correction. So not necessarily a stock market crash, not necessarily a 40% drawdown, but this was, I believe, a 6 to 7% drawdown on the S&P 500, and that was following a breadth divergence signal. So that's something we could expect right now, this type of correction, 6 to 7%, perhaps a little bit more, taking us back to these support levels. That's something we're prepared for. Let's go back to one more example right here. Just before the 2018 crash, you had, again, grinding price action, and then you had these two higher highs on the S&P 500 and a lower high on the breadth. And if we zoom in even more right here, you'll notice the breadth was actually decreasing massively as the markets topped right here. So that was the top. You can see where the breadth was. Quite a big divergence between the market breadth and the S&P 500. Now, if you like our analysis and the discussion we bring to the table, and you're interested in finding out more about our investment and trading strategies, if you're interested in frequent market updates and extended research on the commodities market, precious metals, cryptocurrencies, make sure to go and check out gameoftrades.net. You can check out our free pro membership trial so that you can test out our service. So that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time. Now listen up, if you're already investing in cryptocurrencies, why aren't you investing in tax-free crypto? iTrust Capital is the only provider that allows you to invest in crypto assets within your retirement account. They allow you to not only buy Bitcoin, buy Ethereum, and others. They even have Chainlink coming soon. It's designed for beginners and experts alike. They give you 24/7 trading access and even have built-in institutional grade secure storage. You don't need to worry about creating private keys. If you open an iTrust Capital Roth IRA, it allows you to buy Bitcoin now, and when the asset grows over the next few years, you keep all the profits for yourself with no taxes. If you want to learn more, head to itrustcapital.com and you can request your free insider's guide now. This will teach you all about crypto retirement accounts and how you can invest tax-free.